Hi traders, you're welcome back once again to the Bullish Bear FX Academy. My name is Tim Legend and I'm super excited having you all here today on this one. So you're welcome back once again to the 2024/2025 trading syllabus. Here in this channel, our goal is to teach you a whole lot you need to know and probably everything you need to know about trading from start to finish till you become a professional in this. And the goal is we want to take you guys step by step until we make sure that you are good in the trading industry. So what you want to do in case it is your first time here is to hit the subscribe button, turn the notification bell on, and please, as a way to show the support and as a way to show that indeed you appreciate our efforts and what we're doing in this channel, make sure to hit the like button. And at the course of the video, if you have any question, please do not hesitate to drop them on the comment section, because based on your question, I will understand where you need more explanation and know how to teach you more even in subsequent videos. All right, so make sure you engage in the comment section. So let's get into the main video.
Another pattern you always want to check out for is head and shoulder. Okay, the head and shoulder, that is the head and shoulder is a bearish reversal pattern also. That is a state whereby the market was bullish, suddenly went bearish, rejected bearishly, suddenly bullish, and suddenly went deep down, bullish a little, and boom. Now this one is a very clear scenario to tell you the bulls lose power on this matter. Now it was a bullish market, and which we know that the bullish market goes what? Higher high, higher low. Okay, let me shift it. The market goes higher high, higher low, higher high, higher low, higher high, higher low, and suddenly got here. Okay, I want to explain to you guys here something. Okay, so higher high, higher low, higher high, higher low keeps going. Now created this high high, created a normal higher low, good. Then the next it created another higher high, cool. Now after creating the higher high, it is anticipated that it should create a higher low stopping somewhere here, yeah? Stopping here, which is a normal uptrending move. But whereby instead of stopping here to continue the high, it broke through, went even deeper to this guy here. This move from the bears alone shows that the bulls are losing power gradually, because the amount the bulls used to push here is the same amount the bears use to reject the bulls. That means the bears are kind of like, how dare you? And don't get it twisted, it's also on their zone resistance. So that's why they actually even got the power to do that pushing. So once you see this kind of a thing happen, bullish move, little bearish move, strong bullish move, strong bearish move, strong and strong, yeah, it's telling you that, hey, the bulls might lose power if care is not taken. Then after this strong bearish move, the bulls trying to push again, but failed to push it all the way back up, meaning that they are losing money, or they are losing strength, or their money is not enough to push higher. Once their money is not enough to push higher and it gets here, remember this is a resistance also. The bears will take it as a good opportunity to push deeper. So once you see this pattern, okay, is a signal to tell you that, hey, the bulls are losing power. So you can look for your selling opportunity from here. So how do you take that trade when you see price get into that level? In fact, this is it. The moment you see this high move and see the strong move back to the zone, all right, just draw out your resistance and wait. Draw out your zone. Anything you want to draw out, you draw them all out. Set your trap for price and wait at that zone. For whatever will happen, let it happen. So once price is getting close, then you could begin to see some reactions there. You can start going to lower time frames to check out your candlestick patterns. What pattern are you seeing that can support the fact that it's going bearish anytime soon? Okay, is number one. Here we have three confluences. Number one, you have seen that is a head and shoulder. Number two, price is at the resistance there. And number three, you're waiting for some candlestick reaction to place your strong sell here, set your stop loss above it. Okay, remember, you set your sell here, set your stop loss above the zone, not here. Don't set stop loss here, set your stop loss here and sell along. If he ends up failing and goes hit your stop loss, then wait for next entry here. Okay, wait for next entry here, because if he fails here and begins to go higher, okay, then anticipate that it could be a double top. So anticipate to take another trade here. I hope you guys are understanding. You anticipate to take another trade here. So when price gets here again, start checking out for the next reaction. All right. But oftentimes, whenever it creates this kind of a double head and shoulder, it usually respects and goes down, but not all the time. So let's look for some good opportunities and see. Now, with what I'm seeing on the chart currently, I'm feeling, initially I said the strength in which these guys are pushing, they might break this jaw here and go higher. Yeah, but I'm gradually seeing this head and shoulder here. So who knows what might likely happen? Who knows? They might get to this level, into the zone, and fall back if care isn't taken. And if they mistakenly fall, it's gonna be a deep fall, strong fall. Probably here. Okay? If they mistakenly fall, it's gonna be a very strong fall. That's just one thing that we need to take note of. Head and shoulder. Starting from here, left shoulder, head, and second shoulder. Okay. So this is the head and shoulder too. Okay, so this is what you could be anticipating as a trader, that it could fall from your zone here anytime soon. So if it ends up not falling and breaks through, then you want to check out for the next entry level around there. But let's just see how it will go. So that's for head and shoulder. Yeah, let's see if we can see and spot out another head and shoulder. Now, before we proceed, you need to know that not all the time your head and shoulder will be perfect. Okay, so sometimes you could see some head and shoulders like this. Sometimes you could see some head and shoulder like this. It will go a bit higher than this one. Okay, and then fall. Okay, sometimes you will see the head and shoulder like this. You wouldn't, if you don't look well, you wouldn't even know that it was a head and shoulder. It could be very little. Okay, different kinds of head and shoulder. Sometimes it could even be like this. It's gonna be longer. That's just the market for you guys. So all you need to do is to train your eyes, and that's why market structure is always important. Market structure is about knowing the highs and the lows. Where did the market get to and create a high? Where did it get to and create a low? You need to understand those things. Very important. Okay, let me see if I can spot out another head and shoulder. Here we had another head and shoulder. Okay, so you can see that this one was a bit higher than the previous shoulder, but all the same, it fell through. Okay, all right, so that's for head and shoulder. So I've taught you guys double top, I've taught you double bottom, and I've taught you head and shoulder. The next is inverse head and shoulder, just the opposite of the head and shoulder I just taught you. Okay, just opposite of it. So it is a bullish reversal pattern. It is what? A bullish reversal pattern. So whenever you see it, anticipate buying opportunities, and don't forget market context. So you want to make sure if you're seeing any of these patterns, make sure you're seeing it on the right zone. Very important. Okay. Another thing is this head and shoulder, okay, seem to be, to me, that's what I feel, head and shoulders seem to be a much more stronger pattern than double top and double bottom. Head and shoulders seem to be a much more stronger pattern than double top and double bottom. Okay, the market, you need to understand the market. Once you understand the logic of how the market moves, what moves the market, all right, who is in power, who is weaker, who is stronger, you would know how to follow and who to follow. Because when you don't know who is in power, you wouldn't even know who you're following. And you could be following someone that is weak, even though the market could be looking bullish. But you wouldn't know that the bears are strong in that market than the bullish move. You understand? Like what we figured out a few days ago. You understand? So that's the thing. So head and shoulder is more stronger than the double top because we can see that the bulls, we can see that okay, for universal head and shoulder, we can see here the bears were the ones in power at first, rejecting. Suddenly the bulls showed up. The bears said no, let's keep moving. Suddenly the bulls showed up again with full force against them. Suddenly the bears, and then they lost power. So the bulls showed up 2 times here with strength, yeah, and then here the bulls showed up again the 3rd time, 3 times. But for the normal double bottom, it was a normal move. The bears were rejecting, then the bulls showed up 1, the bears rejected, and then the bulls showed up again. So at this time, if you're a trader who is trying to understand the weakness or the strength of it, you should just know that this one, the bulls showed up only how many times, and for here, the bulls showed up many times to prove that they are ready to move. You understand? They are ready to move. That's just the thing. So take note of that. You guys will just observe that I'm just lecturing you more on the strength and weakness because it's one of the secrets that a lot of beginners don't really understand. Strength and weakness is important in this market. So another one we have is the rising and the falling wedge.